Hello, welcome to Chapter 2, Audit Reports. One thing all statutory audits of limited liability companies have in common is at the end of the day, an independent auditor has to issue a report to the shareholders as the owners of the company. So they'll look at the financial statements, balance sheets, etc., and will have to tell the shareholders what they think. The auditors must report their opinion. It's their opinion, not anybody else's, not anybody they delegated things to, subsidiaries, etc. And there are two main issues: whether the financial statements give a true and fair view, and whether the financial statements have been properly prepared in accordance with relevant professional recommendations, statutory provisions. So that's all your accounting standards. Now, this, of course, is not a new topic, as you'll have studied this area in F8. At P7, it's almost certain that any questions you get in this area will be practical. For instance, the examiner will give you an audit report as drafted and will ask you to give your opinion on how good it is based on a scenario. Okay, now the examiner, as it says here, states she's rather concerned in the auditing paper that she is testing accounting knowledge, and therefore you must anticipate in a scenario some accounting treatments upon which you will discuss the audit opinion. So it is important that you do understand accounting standards and your other papers. I guess if you can't do accounting standards, then how can you do the auditing side of it? Okay, so your knowledge in that area is important. Okay, key terminology for an audit report in a financial statement is it must have all this information: title, addressee, management, auditor's responsibilities, scope, paragraph, opinion, etc. You must also learn the order in which they come. So please, do learn this by heart. Modified audit reports. Standard audit report may be modified. Such modification may or may not result in the auditor giving a qualified opinion. It's important to remember that modifications of an audit report would only be required if there is some material issue. So in P7, it's very important that you actually work out whether something is material. How do you do that? Well, you look at your profits, your assets, and your revenue, and you have your percentages that you learn on the course. And if you're given all three numbers, you will therefore know you have to calculate materiality. If something isn't material, it's not important and doesn't affect your audit report. If, however, something is material, then clearly it is important. You will need a calculator. You will need to do a working and define your materiality that you've calculated. So you'll have an accounting adjustment, which you need to first of all work out what that is. Then you need to work out whether it's material. You then need to work out what your effect that will be on your report. And don't forget, an audit report doesn't have to be modified if you find an issue and the directors make adequate, sufficient disclosure in the accounts of the issue. And therefore, if they do that, you don't need to modify your opinion. Okay, little definition here for materiality. If their omission, their misstatement or non-disclosure would matter to a proper understanding of such financial statements as a part of a potential user. So in other words, if a user would be affected by their views because of something that is omitted, misstated or non-disclosed, then it's material. Modified audit reports with unqualified opinion. Sometimes there may be matters relating to the financial statements which, whilst fully and adequately disclosed, as I've just stated, the auditor considers worthy of bringing to the particular attention of users. So this becomes known as an emphasis of matter. So the paragraph will be self-contained and will not impact on the standard wording of an unmodified report. So it's just bringing to somebody's attention, by the way, do you want to look at this particular point? And I'm going to tell you about it. Okay, so key points to remember for an emphasis of matter: it should be a separate heading It should be positioned after your opinion. It must be made clear that the audit opinion is not qualified, and therefore it should start with, without qualifying our opinion, we draw attention to XYZ. Okay, so do focus on this, because past examiner reports have indicated many candidates are unclear on what emphasis of matter is all about, whether it's a qualification or not. It isn't. Okay. Emphasis of matter is when a significant uncertainty with which is fully and adequately disclosed in the notes of the financial statement is an example. Where there is a material inconsistency between financial statements and the director's report, and the adjustment required to remove the inconsistency would need to be made in the director's report, but the directors are not prepared to make such adjustment, so you'd emphasis of matter it. Modified audit report with a qualified opinion. What does this mean? Well, there are two main circumstances which might give rise to the auditors being in this position. First of all, limitation on scope, which basically means that the auditor was unable to carry out some audit work which they would normally have expected to perform. Their work has been limited, in other words. The other area is disagreement exists between the auditors and the client management in relation to some aspect of the financial statements. So they cannot agree on a disclosure on an accounting adjustment. Now, the type of qualified opinion to be given will depend not just on the circumstances, as indicated above, but also on how serious the limitation on scope or disagreement is, namely is material but not for pervasive. So is something material but not pervasive? Pervasive means it's throughout the whole accounts, it's fundamental to the whole accounts. What you therefore give is it's an except for. Okay? If something's material and pervasive, then it clearly must be throughout the whole financial statements and it impacts the overall view. If in such a situation it's limitation on scope, the author should give a disclaimer of opinion, I can't give an opinion. Whereas if it's because of disagreement, it's not limited scope, they should give an adverse opinion. Okay? Now, another key thing is the circumstances giving rise to a qualified audit opinion should be described in a separate paragraph before your audit opinion. Wherever possible, the author should quantify their qualification circumstances, as this should make it easy for the reader to appreciate its significance. I think a diagram approach is quite useful for what we've just talked about. So let's work our way through it. Is any material modification required? So is something material? If the answer is yes, does it impact on the audit opinion? If no, just include an emphasis of matter paragraph. If, however, it does affect the audit opinion, is the qualification issue pervasive, i.e. throughout the whole accounts? If the answer is no, then you have an except for opinion. If the answer is yes, it's a disagreement as opposed to limitation or scope you need to work out, then no, give a disclaimer of opinion. If it's a disagreement, yes, give an adverse opinion. Alright, that is quite a nice little diagram to try and remember the difference between all the different types of reports. Okay, right, end of that paragraph, that recording. See you in the next one.